The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Sorry about that. How about that? Welcome to the April 4th, the fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I want you to know that I'm absolutely grateful for your presence here. But more important than that, that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email, send it off to steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, if you're inside our Tigers den, well, then any and every ping will do. So let's go ahead and get this show started on Fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, of course, we begin our day here with a sea of red. Dow's off 1,142 points. S&P down 185. NASDAQ 100,672. Russell's off 83. Transport's down 540. Semis off 250. NASDAQ Composite down 638, that is. 65 points the downside for gold. $2.17 for silver. $4.86 for light sweet crude. 20 cents for natural gas. Not a lot of places to hide other than in the 30-year and 10-year notes out there. They are trading the upside. The 30-year is up about 1.5 points right now. So where do we want to begin? You know, there's a little bit of a counter trend move that's going on. So why don't I just first go to the shorter term time frame charts, give folks some resistance levels to be taken a look at. So we'll first start by taking a look at the intraday charts here for the NQ. Well, actually, let's do this first. Let me first pull back here. Let's start with the daily time frame. So I want to at least do that. So here on the daily time frame, you can see the A to B equals CD patterns that are drawn in. So the ES mini for its daily time frame has attained its 1-to-1 price objective. The NQ has not made it all the way down there. Its price objective about 17,320 or so. The Dow has not made its price objective, its initial price objective. The Russell 2000 has and beyond. So the Russell 2000, a bullish reversal candle would confirm a buy the D point pattern. In the case of the ES Mini, it would be the same thing. So I just want to start there. Now, I do have a potential wave number 7 count inside of the NQ for its daily time frame. Now, let's go to, so now you get the bigger picture, at least bigger picture for the daily time frame. Now let's go take a look at those intraday charts out there. And again, we're going to start here with the NQ. I'm not going to really pay attention to the daily time frame. 5-hour time frame. At 2 p.m., we get a completed TD9 count bottom pattern. What does that suggest? That suggests that not necessarily today, could be Sunday, Monday, but that price should rally as long as this level holds. Now, at 2 p.m., if price closes below, going into the close, whatever the low of the current session is, so by 2 p.m., that right now I can tell you the current low is 17,656. Let's assume that low holds. For the time being. If price closes below that coming in to the end of today's trading session, well, that pattern gets negated. In the case of the 4-hour time frame chart, it needs a bullish reversal candle to confirm a Rhodes momentum indicator bottom. The NQ for the 2-hour time frame chart, I don't have a bottom pattern out there. I'm not going to go back and try to figure out if there's an A to B equals CD pattern to the downside because there's too many other signals that we can take a look at, such as the 30-minute signal. The 30-minute time frame held its TD9 count bottom. In fact, let's go take a look at all of the 30-minute time frame charts and see if they all held, or if the ES Mini, I think, may have busted through its TD9 count bottom. But give me a second here. I'm going to go ahead and pull those charts up just so we can get one time frame on our screen. Where did I put that? Here we go. One time frame on our screen. See if all of these lows held. Okay. So here we've got the TD9 count bottom pattern for the ES Mini. And the low on that was 52.10, and we actually closed at 11 o'clock at 52.08. But you can see it also has triggered a Rhodes Momentum Indicator signal. So a bullish reversal candle in the next 19 minutes from now, if that's what forms, you'd have a Rhodes Momentum Indicator bottom. Price is dealing with the first level of resistance as we speak right now for the 30-minute time frame. And that is the bottom of its profile as well as its oscillator and change line. So the bottom of the profile is 52.50, 52.50 also the oscillator and change line. In the case of the NQ for the 30-minute time frame chart, it held its TD9 count bottom. It's also potentially forming a Rhodes Momentum Indicator bottom. It's dealing with resistance, and that's its oscillator and change line. If we get 2 consecutive closes above it, it right now is 18,026, then we're likely to get a rally up towards the 18,658 level, certainly 18,490. That would be the bottom of its current profile. The Dow Equity Future contract maintains its TD9 count bottom pattern. Like the other two, is potentially forming a Rhodes Momentum Indicator bottom signal for the 30-minute time frame. Price trading into the sell zone. So this is a slightly bearish 30-minute profile. What that means is that you have sellers that are lurking between 39,724 and 39,991. Now, I never know. We never know. Can the buyers overrun those sellers? But right now, on the Dow Equity Future contract, price trading into a resistance level. Therefore, it would be a close above 39,991 that would tell you that the rally that has begun thus far has more legs to it. And those more legs ought to take you up towards 4602. In the case of Russell 2000, its TD9 count bottom pattern held. It's now also, like the ES, the NQ, and the Dow, forming a potential Rhodes Momentum Indicator bottom. It still has 18 minutes before that pattern completes. Its profile is relatively balanced. So the key level of resistance here for the Russell, that is going to be at 1869.80. If price is able to close above that for 2 consecutive bars, then we're likely going to make a move to the 1914 level. Now, the markets are extremely oversold. How do we know that? Well, if we go take a look at least they were. Let's go see where they're at right now. We're going to take a look at the New York Stock Exchange Advanced Decline Oscillator. That's going to be your bottom left-hand panel. It is trading below that blue line. That blue line marks the minus 150 and the plus 150 level. When you get to below minus 150, which we're at right now, we're at minus 172, market conditions are oversold. Oversold out there. Now, conditions can get more oversold than that. This is going to be more important when it comes to the end of the day. If we close back above the minus 150 level, then that's telling us it still's got more room to push down on Sunday out there. New York Stock Exchange, by the way, is trading an A to B equals CD pattern to the downside. It's now at its probably 1 to 1.272, maybe 1 to 1.618. On level out there, spot VIX index trading now at 37.93. I'm not sure what percentage is up today, 25, 30, but we are in such a gigantic contango that we got to be cautious. There's going to be rallies out there between oversold market conditions, between the spot VIX and what it is doing. Right now, the spot VIX is up 27%. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Let's take a look at the cash indices out here. Each of these have A to B equals CD patterns to the downside. If we take a look at the Dow Jones Industrials, you can see that its price objective, its initial price objective, about 38,439. We have not hit that level out there. In the case of the S&P 500, the cash index, just like the equity future contract, has basically hit that right to the T. It's 1-to-1. Now, what that needs is a bullish reversal candle. If we were to get a bullish reversal candle, that would confirm a buy the D point bottom. Same thing with regard to the NASDAQ 100. However, the NASDAQ 100 has not hit its initial price objective, so we're away from that. In the case of the Russell 2000, it's got 2 different A to B equals CD patterns. It's got the one that started way back here. That was starting on the November 22nd, 2024 level. And then there's a smaller A to B equals CD pattern. The larger one, we're basically at about a 1 to 2 area out there. If we were to get a bullish reversal candle, it would confirm in this case here, a Rhodes momentum indicator bottom and a buy the D point. Now, even though this says that it's a bullish hammer candle, you still have to account for the gap that's out there. And if I painted in this gap and added it to the candle, then this would not be a bullish hammer candle out there. So when we have gaps to the upside or the downside, and we're taking a look at either bearish shooting stars or bullish hammer candles out there, it's kind of a caution sign to actually use that candle formation because you've got 2 different signals out there. So that would just simply mean you go to the intraday charts to see what they're communicating to us. If we take a look at the semiconductor index out there, that's an interesting chart. It's the only one that's got a TD9 count bottom pattern that could form between this week and the next 2. It's got an A to B equals CD pattern to the downside. I'm just showing you the C to D leg out there. So we've attained the 1-to-1 level or beyond that. A bullish reversal candle here would also confirm a buy the D point bottom pattern. Same thing with the transports. The transports also having a wave number 7 bottom. That could only be confirmed with a higher low come Monday. Again, a bullish reversal candle here would confirm both a buy the D point pattern as well as a Rhodes momentum indicator bottom. In the case of the NASDAQ composite, much like the NASDAQ 100, has not attained the 1-to-1 price objective out there. And the New York Stock Exchange, which we took a look at just a few moments ago, that has attained the 1-to-1 level. A bullish reversal candle is what it needs to confirm a buy the D point pattern. So that's what's going on with regard to the daily cash indices out there. Let's start taking a look at a couple of requests that have come in. One came in earlier inside the Tigers Den that I answered, but and I want to just share with you what it was. It was for NVIDIA, which is about as popular an instrument as we have out here. On the daily time frame, you'll see the A to B equals CD pattern. That would take us down towards the $85 level. Today is going to become bar number 8 of a TD9 count. So NVIDIA, for its daily time frame, could form a bottom between today and next Tuesday out there. If it the weekly time frame, so the weekly time frame shows that price is trading into a swing point that created a bottom back here in August 9th to be exact. Now that weekly chart, talk about volume, that had 2 billion shares, 2.056. And take a look at where we're at this week out here. We're pulling back with really light volume, 1.287. So light volume, just pulling into a swing point with light volume doesn't mean that that's the bottom. But it does look like NVIDIA is attempting to form some type of bottom between now and Tuesday out there. The monthly time frame chart says if a daily or weekly bottom does not form, if we close below the low of the swing point, even with it being on light volume, that low being 90.69, we have further to go to the downside. And NVIDIA, the next area that gets opened up on a monthly time frame chart, because we are trading below profile support, is $40.87 out there. So that's what's going on inside of NVIDIA. There was a request that came in yesterday. I didn't get it, just the way that ISPs work out there until after we were done with the show. And it was from Marty. And Marty wanted to take a look at ticker symbol GORO. Now, GORO, may form a A to B equals CD pattern to the downside. It's currently working on its taking on its swing point from March 20th. That has 2 million shares. So far, in less than 2 hours of trading, this done 1.4 million shares. So Goro's got the volume to the downside. The question is, does it take out that swing point? First, let's draw in the A to B equals CD pattern out here. So there's A to B. I'm going to go ahead and copy. I'm going to paste. I'm going to move it over to the C point. So the 1-to-1 price objective would get you down towards 38 cents out there. All it needs to do to put that forecast or that projection in play is close below 45 cents out there. It also has breakout support at 29 cents. The weekly time frame chart shows that price is sitting at a key level of support. That's at 42 cents out there, Marty. If price closes below that, it will have lost its momentum for the weekly time frame and suggest that we could get back towards the 33 cent area. So watch 42 cents. You close below that, and I'd say 29 to 33 becomes the price target out there. Sorry that you had to wait a day on that. But thanks so much for doing that. Let's go to our next request. The next request is really three different requests out there. The first request, where did I put it? Let's see if I did this right. The first request is to take a look at the EWG. This is coming in from Robert. And what Robert's looking at is trying to understand, or maybe is there better buying opportunities in some of the international markets. So we're going to take a look at the ETF for Germany, for the Eurozone, and one for China. So that's EWG, EZU, and FXI, in case you want to try to pull those up on your charts. So when we take a look at the German index, ETF out here, EWG, today it's confirmed an A to B equals CD pattern to the downside. It's attained its 1-to-1 price objective in just one single day. It has also tested and rejected its T9 count breakout level at 34.61. That's the good news. What's the bad news? The bad news is we got a TD9 count top. We are trading below profile support. So if 34.61 gives way, then what we're looking at is likely to move back to 31.66. But before price gets there, there's one additional level of support that could be tested, and that is its monthly oscillator and change line. Currently printed at 33.97. I can assure you it will be lower if price moves lower out there. What's that number? I don't know. 33.80, 85, something like that. So you may get a bounce out of here. Is it a bottom? So the interesting thing here is when you do pull back to a breakout level, Robert, it can be a bottom. But because we have the A to B equals CD pattern, what you would do is you would wait for a bullish reversal candle to confirm that, especially with price below profile support and this oscillator and change line on the weekly time frame. So that's what we see when we take a look at EWG. Is that any better than the U.S. markets and their A to B equals CD patterns to the downside? Well, actually what I should do is let's look at the SPY first. So we'll come back and we'll take a look at EZU. But let's go take a look at the SPY and see what it's signaling to you and I. Just use the SPY versus EWG as an example. Let's open up the daily time frame chart. Sorry about that. Before I do that, well, as long as it's open, what the heck. So you'll see the weekly chart showed the A to B equals CD pattern. And as we've talked about, the ES Mini, the S&P Cash Indice, has hit its A to B equals CD price objective. I'm just simply going to move this over, if I can, over to the C point. So you can see it's attained its one-to-one price objective. Now, has it hit a breakout level? Well, for that, what I would need to do is increase. I'm only showing one breakout level. So let me go ahead and let's change that. In fact, for right now, we're going to put that to unlimited. It's going to give me all the breakout levels. Now, what I'm just trying to see is, are we at another breakout area back here as we pull this back? And the answer to that question is yes. 524.96 is a TD9 count breakout level. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. I left the SPY chart up on my screen because I gave you an inaccurate figure. That figure is 508.56. That is the next TD9 count breakout level. That takes us all the way back to the trading day of May 3rd of 2024 out there. So you can see the A to B equals CD pattern to the downside. The SPY needs a bullish reversal candle to confirm a bottom. As far as this next price target to the downside, well, the SPY is trading into, much like we took a look at NVIDIA, the SPY is trading into its swing point from August the 9th out there. Now, that swing has 410 million shares. Right now, we are pulling back into it with a 415 million shares. So we're pushing to that swing point with volume. We have actually tested and rejected the low. Typically, what that says is that we will get, even if we, close above that swing point, what the weekly chart is signaling to us is that even if we've rejected it with volume, price will be back down to test that low at least once again out there. On the monthly time frame chart, again, we're so early in the month, but we are trading below profile support at 530.86. The SPY itself, for its 30-minute time frame, has got a TD9 count bottom pattern. Now let's go back and take a look at the EZU for Robert and see what kind of what signals that is providing to us. EZU, like the SPY, like the EWG, have completed its A to B equals CD pattern to the downside. Now, in the case of the Eurozone EZU ETF, price is trading below 50.65, which is its TD9 count breakout level. Here, this also will need a bullish reversal candle to confirm a bottom. The weekly time frame chart shows that we're trading below profile support, so its next level of support would be 46.84. The monthly time frame shows that we are back inside its profile and below its oscillator and change line. So its next area of support would be down at the 48.97 level out there. Do I think the EZU or the EWG is better than the SPY as a potential? I don't. We're all moving in. It's all moving in the same type of direction. Let's go check out the FXI. Let's go see what we've got in store for us when we take a look at the China market out there. FXI. Now, in the case of the FXI, there's really no A to B equals CD pattern to the downside that I can draw in there. None that I see. What price has done is it has gotten all the way back to its breakout level. So 32.20, Robert, is going to be the key area to watch there. If price trades below that, what that would signal to us is a move back towards the 28.41 to 29.54 level. So on the FXI, big gap to the downside, just can't draw in a legitimate A to B equals CD pattern, and you've got to watch that 32.20 level. Not much more that I can. You've got, this will be 4 days in a row to the downside, so maybe get a one-day rally. But is FXI any better than the SPY? I don't think so. Not that I see at this stage of the game out there. So I hope that helped you out, Robert, and thanks for waiting a day on that request out there. ELO wanted to take a look at 3M out here, so let's pull up 3M's charts, see what it is signaling to you and I. 3M is in bar number 7 as it approaches its next TD9 count breakout area. And ELO, that's at 129.54. So it's possible. You still need to see lower lows next week. It's possible that a TD9 count bottom could form between Monday and Wednesday of next week. The weekly time frame shows us, let me actually get this populated with decorated with signals out here. So what we can see is that a close today below 133.63 in 3M will tell you that the move to the downside for its weekly time frame is something more than just a counter trend move. And that would tell us that what price really wants to do is get back towards its area of support, and that is between the 126.53 to 127.95 area out there. Nonetheless, still watch for the daily potential TD9 count bottom pattern to form come next week. The next area of support, and it's really right inside that same range as the weekly, is the monthly oscillator and change line, 127.77 out there. So it looks to me like that's where price is going to head towards as it goes ahead and develops that TD9 count bottom pattern. So that's what we've got. We take a look at 3M. I hope that helps you out. You also, or no, not you, but GTE wanted to take a look at XPEV. And the real question here was, where is support? Well, you got really, I'll give you two levels from the daily time frame. The first level is its actual, I'm going to give you three levels, I believe. So the first level of support will be the bottom of its daily profile, 1977. We're trading below that. The second level of support is the bottom of its TD9 count pattern. That's at the price point of 1943. We're trading right now at 1943. If price holds 1943 on the daily time frame, its daily TD9 count bottom will have held. What does that mean? That just means support will have held. What happens, Stevie, if price closes below that? The next area of support would be 1633. Now, this could form an A to B equals CD pattern to the downside. The swing point that we're looking at, the TD9 count bottom swing point, was March 28th. Volume, 8.5 million shares. So far today, 8.8 million shares. So XPEV has volume, and if it closes below that swing point, you're going to trigger an A to B equals CD pattern to the downside. Just simply going to move the over to the C point, and that would get you down into the 14 area. If we look at the weekly time frame chart, you have a TD9 count top and XPEV. Price is trading below its green oscillator and change line. That's at 1993. A close below that says it's lost its momentum. What I would say is that a close below the TD9 count low, again, that number is going to be 1943. Then its signal on the weekly time frame says we get back to 1597 or 1161. 1597 being the bottom of its weekly profile. On a monthly time frame, XPEV, there's really not much there to assist us with. So GT, I hope that helps you out. You also wanted to take a KWEB. So let's go ahead and get that chart up on our screen out here. KWEB, a China web ETF out there. So it's going to take just a few moments here to populate, and let's go see what it is doing. Maybe more than just a few moments, because the system is kind of working on overtime right now. So, and I've got as little stuff open as I possibly can. So KWEB, I can see an A to B equals CD pattern to the downside. I'm not going to go ahead and draw it in. Don't need to. At this stage here, it's attained at least its 1-to-1 level. But the key area for you to watch today, GTE, is going to be 3157. A close below that is a close below its TD9 count breakout level. And that suggests lower price. Now, a bullish reversal candle that could form after that would generate a buy the D point pattern. So where's the next lower price below 3157? Excellent question, and it's really the buy zone. It's the buy zone established by the weekly time frame, and that's between the price point of 2827 to 3026. On a monthly time frame, the next level of support to the downside is really the buy zone as well, and that would be between 2613 and 2758. So on KWEB, you're watching 3157. You close below that, we're likely headed to 3026. Below that, 2827. That's what we've got for KWEB. We get back from this break, we're going to take a look at the charts for TNGX. That's for Rye inside the Tiger's Den. Of course, I'd love to hear from you as well. That's Steve at TFNN.com. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We're taking a ticker symbol TNGX. This is for Rye inside the Tiger's Den. This is a symbol that's having a pity party out there. Basically, almost nobody in a winning position. Now, the only people in a winning position are those that bought today at $1.21. We're trading right now at $1.27. So this still has a Rhodes Momentum Indicator bottom pattern. That would be negated with a close below 123. So that's a daily time frame. The weekly time frame chart is going to confirm bar number 8 of a TD9 count pattern. That suggested a bottom could form between this week and the next 2 out there. Monthly time frame chart does not have any kind of a bottom signal at all whatsoever. So you really need to wait for, I think you've got to wait for the weekly to give you any kind of a bottom signal out there before you add to your position or consider taking a long position inside of TNGX. So, Rye, I hope that helps you out. Thanks so much for the request. We've got another request, which is for let's take a look at McDonald's. MCD is the ticker symbol out here. This is for ELO inside the Tiger's Den. So McDonald's holding up relatively well, that is. And that, what I mean by that is McDonald's is consolidating with inside its daily and its weekly profile. The daily level of support is at 304.82. If price closes below that, that could signal, well, what would that signal? That would then signal that we head back to the buy zone of the weekly time frame chart for McDonald's. Now, McDonald's has a Rhodes Momentum Indicator top. It generated that top 4 weeks ago, and that simply led to a consolidation with inside its bullish structured weekly profile. It finds resistance. It has found resistance both last week and this week at the top of that profile. That number is 316.80. Price remains above that green oscillator and change line, so it's actually holding up very well. Monthly time frame chart, no problema. Price is trading above profile resistance and its oscillator and change line. I do see a potential wave number 7 top, but that requires a lower high at the end of the month, and it's only April 4th, so it's too early to call that. But McDonald's does look pretty good out there, ELO. I hope that gave you the information that you were looking for. DM wants to take a look at TAP and is looking for an entry into TAP. Now, TAP is going to go ahead and complete a TD9 count topping pattern today. So where are your entry points? Let me share with you the support levels on a pullback out there. And price is trading with inside its profile. As you can see, if you're watching this on Tiger TV or inside the Tiger's Den, you can see that the first level of support on a retracement here is going to be that green oscillator and change line. And that's at about the 61.39 level. Again, that number is going to change up and down as price moves up and down. So that's your first level. Below that, the next area would be its buy zone, and the buy zone of its daily profile, and that would be between 59.60 and 60.48. Below that, it would be its TD9 count breakout level at 58.32. The weekly time frame chart shows that price is consolidating with inside its weekly profile. It ran into resistance this week at 63.46. So as the TD9 count top was forming yesterday, resistance was being tested on the weekly time frame, and it held. So now you know 63.46 is a key level of resistance. The monthly time frame chart, it's bullish. Price remains above profile resistance and its oscillator and change line. So it's just a daily. Now its level of support is going to be 59.43. So 61.39 is the first level. 59.43 will be the second area. 60.48 to 59.60, another zone, and 58.32. So how are you going to be able to figure out which of those are the right ones? Well, first, what I'll be looking at is some type of intraday chart. Not today, because today's not it. We're not even back at those levels. But as we get back towards that area, a DM, what you want to do is right back in or track that on your own system, but you'd be looking for some type of intraday bottoming signal out there. Hope that helps you out. Lucy wrote in, and Lucy wants to take a look at the GDX, which is getting just trashed and thrashed this morning. It is down right now at 40, printing out at 42.02. It is trading below profile support for its daily time frame. That's at 44.15. So for the daily time frame, the next level of support would be down at 40.19. On a weekly time frame, this looks like we're going to get a confirmed Rhodes Momentum Indicator top. And the question is, does price close below 42.31-ish? 42.31-ish is the weekly oscillator and change line. If price closes below that, it tells us that the GDX has lost momentum for its intermediate term time frame, and that would really suggest 40.19 is the next price target to the downside. Can price get below there? Of course it can. And if it's moving down with volume, the volume on its TD9 count bottom from back in February 28th was 15 million shares. So far today, as an example, on its move to the downside, in just a couple hours of trading, is 25 million shares. So they're stepping on the gas to exit the GDX, but watch 40.19. Below that, it would actually be its TD9 count bottom, and that would be at 38.58. The weekly time frame chart takes us out to 38.60. So it would suggest that 40.19 does not hold the support, that we're going to get down and test that swing point. And if that fails, then what looks like we'd be looking at in the GDX is move anywhere between 35.10 and 36.87. Now, is there another level of support before we get to 40.19? And the answer to that is yeah, but it's not much higher. It's at 40.47, and that would be the top of the monthly profile. And below that, it's its oscillator and change line at 39.40. Those are the key levels there for the GDX. So what I'd be watching for today is I'd be watching the 42.31-ish level. Close below that, you're likely to see lower moves inside of the GDX out there. Brent writes in and he asks, can we talk about the spot VIX? Can we talk about the VIX index itself? So what do I have to say about it? Well, first, what I have to say, Brent, is I wish that I could open up my other charts out there, the e-signal charts. Maybe I'll try to do that as we go into the breakout there. I just don't know that it will refresh itself before we come back. But what I would share with you, what I would show you is that the spot VIX index trading at 39.23, or even the April spot VIX contract, is trading well above every forward future contract out there. That sets up the potential for a very large move to the upside. Things are out of whack, but not until the spot VIX index itself trades below those levels, gets back below the forward future contracts, will we have that signal of a potential bottom. We're talking about, when I take a look at it, we were at new highs earlier this morning that we hadn't seen for quite some time with regard to that ratio on the yearly time frame out there. We're having these one-day rates of change, that are well above 10%. Every little rally has been kicked back out there, so that hasn't really worked very well. We had one yesterday. We've got one now. We were looking earlier at the 30-minute time frame charts. Let me just go back over here to equity futures and see what they're doing. So here we've got the NQ up on my screen. So in the case of the NQ, key level of support is resistance being tested right now. That's on the 30-minute time frame chart. That is its oscillator and change line. I know this doesn't really help much with the VIX out there. The reason why I'm taking a look at that is because we still have that one-day rate of change yesterday. Clearly, we're over 10% of the spot VIX today out there. So at some point in time, that tool will take hold out there. The key thing here right now that we're watching for intraday are key levels of resistance, which I would say at this moment in time, the most key level is 18,347 or thereabouts. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. Just by the hair on my chinny chin chin, I was able to pull up those charts here that we could take a look at. The bottom panel on the right, we're taking a look at the ratio between the spot VIX index and its one-year counterpart. The center chart is a 3-month counterpart. The right-hand side is a 6-month counterpart. You can see that we're above the 1 level out there. That tells us that the spot VIX is trading above those instruments out there. You can see I've got my chart here decorated for those instances when we go above 1. Right now, I was mentioning on the yearly level that we are up at a price at a area that we haven't seen since back in August of 2024 out there, and you can see that proved to be a fairly viable bottom out there. So you want to watch these now. They really don't give us a confirmed message until price gets back below that zero threshold level. Of course, what we would be looking for is buy the D point bottom patterns and things of that sort. which would come from a bullish reversal candles. We take the daily equity future contracts out here. Again, we've got their A to B equals CD patterns. The ones that could form bottom signals, come Sunday, Monday, would certainly be the ES because it's attained that 1-to-1 price level. And the same thing with the Russell 2000. We had a request to take a look at TGB out here. So let's get back to that chart. This here, I think I put it over here. The key level that you're watching here for Seiko Mines is going to be the low. Oh, come on, work with me here. It's going to be the low from, sorry, folks, too much going on in my system out here. I can't really get, that's so weird. I can't get a swing point. In any event, there is a swing point. I'm hoping, there we go. Wow. Okay, here's what I can share with you so far right now, Dan. Price is trading below 183. That is its TD9 count breakout level. It's got a TD9 count bottom that formed on February 3rd. The volume there was like 4.6 million shares so far for the day. This has done 10 million shares. That's a key level. If price closes below that daily TD9 count bottom, that is at $177, you're going to head down towards the 137 area. Hey, folks, thanks so much for joining me today. Have a fabulous Friday, a wonderful weekend. I'll look forward to seeing you on Marvelous Monday. Take care. Be safe out there.